Welcome back to another episode of the Hathaway Kunz podcast, where we do a deep dive on all things legal in the state of Wyoming. Today, we're back for part 2 of our discussion on digital asset law and digital asset regulation in the state of Wyoming. Last time, we talked a little bit higher level about kind of trends and regulatory events happening at the federal level. Today, we're going to talk a little bit more specifically about what's happening in the state of Wyoming. So, Flavia, last time we spoke on these topics, we kind of hit at a very high level what's going on both from the president's level, Congress, sort of federal agencies. And then we kind of touched on some of the things that are happening here in Wyoming. I thought this time maybe we could dive in a little bit more to some of the things that we're seeing, the projects we're working on, and how some of this is really materializing in Wyoming. So maybe I'll tee it up this way, and these are my words, not yours, so you can change it if you want. But I kind of see a lot of the things that Wyoming has done. We like to say that Wyoming is a leader in the blockchain space because we've passed, people count it differently, 30, 40 bills touching on blockchain, crypto in different ways. But I kind of put them in sort of 3 main buckets. There's kind of, in my mind, there's sort of the property bucket. Wyoming has done a really nice job of creating definitional structures in our statute around defining digital assets and what they are and how those definitions can apply to lots of legal contexts, which really helps create certainty for contracts, for banking, for financial services. So that was really cool. Then we have kind of the regulated services, sort of, we're going to talk more about SPDI, special purpose depositories, and trust companies, which are authorized through state statute to conduct these services in the blockchain realm. And then we kind of have a lot of stuff surrounding entities and conducting a business that's in a sort of a digital asset enabled way, is how I phrase it. There's other things too, but those are kind of the 3 main buckets that we talk a lot about with clients. So maybe let's take those one at a time. And I think you and I spend a lot of time in the regulated services bucket, right? Yes. We both represent and work with a lot of the entities that are coming to Wyoming for the purposes of obtaining charters, licenses to provide these services. Help maybe frame this for our listeners. Like, what are these people trying to do, right? What is the ultimate goal of, why do they need a license? Why do they need a charter? And what does Wyoming offer them in that respect?
Yeah, so what Wyoming has that is different from the other states, again, is what we discussed in the first episode, is a better understanding of how these entities actually operate and the risk associated with it. One of the things that the other state regulators haven't done yet, or even the federal level, is actually stop to understand how this industry operates, what the risks are, and then regulate in a way to control these risks. And Wyoming has done that. It did so by creating the Special Purpose Depository Institution, what we call SPDs, and then allowing trust companies to engage in activities around digital assets, right? So what these companies want to do is, again, be custodians of digital assets on behalf of a third party. And for that, you're either going to be a bank or you're going to be a trust. You're going to hold these funds in trust. And it may be for estate planning or for whatever it is that you want to do. You have a trust company, or if you want to just engage in day-to-day activity, you have a bank charter, which is a SPDI. So regulation of this industry is important because, again, you're being entrusted with the assets that belong to a third party, and it's a huge obligation, right? So you want to make sure that by being entrusted with those assets, that you're taking care of them in a fiduciary way. So what the state regulator says is, yes, I'm going to entrust, I'm going to give you a license for this, but here are the things that you have to do. I want to make sure that you're doing things the right way. I want to make sure that you're not enabling activity that is illegal or that is fostering money laundering or terrorist financing. I'm going to make sure that you have controls in place to protect these assets, and I'm going to check on you on a yearly basis and make sure that you're doing things the right way. And that is the right way to do this industry, the right way to work with the industry and enable it to grow. So Wyoming has really taken a leadership in this area. You've seen other states that have tried to regulate this through different licenses called beer licenses, but they're not the same and they do not provide the same level of oversight and enablement of activities as the SPDI does.
And we talked last time a little bit about the industry in general maturing, but this is a great, I think, example of that, because people have heard about some of the, the big failures in the blockchain space, the Celsiuses and BlockFis and companies like that. What I think people fail to recognize is those weren't regulated entities, right? They was, if you and I were just to start a company and say, hey, give us your assets and we'll hold them and then we'll do something with them and give them back to you when you want. And we're not doing that in any regulated fashion. And we regulate that in this country. And there's a reason for that, right? To make sure that that money's going to be there when you're done, or that what you're doing with it while you're custodying those assets is safe, sound, secure. Or like you mentioned, AML, anti-money laundering, which is a huge topic right now in crypto and blockchain in general, making sure that we're not accidentally funding, terrorists or rogue nations or something like that. So all of these things are really, really important in financial services, and crypto kind of didn't take that seriously for a long time. And now we're seeing this flight to, okay, we want to be regulated. We want to know that we're doing this in a regulated manner. And Wyoming, it gets way undersold, but has blazed the trail, right, with respect to that. And to your point, not only was Wyoming the first place to create one of these charters through the SBDI, but it was the first state to create a way for us to examine, right, and to vet and ensure that these institutions are actually going to be operated in a safe and sound manner. And that's something, other states have tried to copy our legislation, but they haven't really executed it very well. And certainly no one has built out the regulatory enforcement piece of it like Wyoming has.
The examination manual for SPDIs is off the charts, like really banking level. And I have good word that people have tried to copy that and have not been able to, again, because the state really took the time. It's not a matter of just copying and pasting something. You need to understand the industry to be able to create something like that. If you're just going to copy and paste without understanding the underlying industry, you're not going to know how to use it. So it doesn't really matter. It's just going to be words on a piece of paper instead of actually effectively doing anything.
Yep, absolutely. Well, then moving on to kind of one of the other buckets that we talked about that we've seen a lot of activity in Wyoming. And last episode, we kind of talked just a little bit about the DAOs and the DUNAs. But again, we've just seen an incredible explosion in that arena. And it's fun, but it's also scary because people have creative ideas about what to do with entities. We've seen people want to use DAOs and sort of decentralized protocols for everything from launching tokens to estate planning to foundations and nonprofit organizations that would distribute funds or money or take some sort of action. So there's been an incredible amount of growth and innovation in that area. As a corporate lawyer, it kind of excites me because, a lot of our corporate structures and our legal structures and requirements are pretty antiquated. They move incredibly slowly.
We've seen also DAOs to enable charitable donations in developing countries, right? So there are ways to ensure that the funds that you actually want to donate to a charitable organization are going to reach 100%. That charitable organization are going to have to go through multiple levels in the country that you're trying to cover. Circle did that with USDC in the Ukraine and Venezuela and did it really well. So you having that connection between this industry and these developing countries to enable funds to reach people that are unbanked or systems that have, countries that have banking systems, but that are either under stress due to war or to dictatorship. You want to make sure that the funds actually reach those individuals instead of being held back by multiple institutions that are going to take a piece. So using DAOs for that is also a very interesting way because, again, it's an algorithm that is going to execute a smart contract and that's it. There's no questions about it. And then you get the membership, the voice of the membership to vote on something like this. It's really exciting.
Yeah, you hit on a theme there that I think is enormous within the blockchain space, and that's transparency, right? Which is something that everyone aims to try to, accommodate and facilitate through their project. But I've shared this example a million times, so maybe some of our listeners have heard it if they've heard me speak about DAOs before. But one of my favorite examples of something really boring and mundane that I had never heard of being done outside of Wyoming before we enabled this, but take the concept of a quorum, right? Within like a traditional corporation. So you have shares in a corporation. Somebody wants to do something, they call a meeting and everybody shows up and votes their shares, right? Yeah. you have to have a quorum of the shareholders at that meeting to take action. Well, it kind of creates this weird incentive in the law that if you just don't participate, it creates drag on the entity, right? Because if enough people don't participate, which usually they don't because they don't have the incentive to participate, it can become very difficult for a company to do something. One of our very first DAO clients posed this problem, and using Wyoming's DAO law, we were able to completely flip that quorum concept on its head and create an incentive whereby through this algorithmic voting mechanism, somebody submits a proposal, the quorum is initiated on a time basis, not a number basis, right? So if you don't vote within 48 hours, you miss out, right? So whoever votes within that 48-hour period, that is the quorum, right? And so it incentivizes people to participate because if you don't, a minority could technically control. So it's really dumb. It's really simple. It's probably super nerdy, but I think we've yet to see how this is going to revolutionize the way that people think about corporate governance and entities and entity structures. And so it's really exciting to me to see Wyoming leading in that respect.
Oh, absolutely. And we've seen a huge shift in the corporate sector of folks fleeing traditional states for incorporation. So, usually when you say, where should I incorporate my company? First thought, for some reason, Delaware, right? Everyone goes to Delaware. It has been the bread and butter, and that's what you do. And it's no longer that. It's people are asking, where should I incorporate? Delaware is no longer the place to go. It has provided for Texas, for Wyoming, for other states that actually are leading the charts in corporate services to come back and claim that space. So we've seen, just speaking to other attorneys that are friends are saying, I'm leaving Delaware, I'm going to Nevada, I'm going to Texas, I'm coming to Wyoming. Because again, they're looking for that opportunity to have a better setup for their corporate services than just the traditional things that you would expect out of Delaware.
Yeah. Well, and that kind of segues into the third bucket of the three buckets, which is sort of the property, what I call the property rights bucket. And we've seen a lot of legislative movement in that respect, but Wyoming becomes a really, really, really attractive domicile for entities when you combine the corporate stuff, you combine the regulatory stuff, and then you combine the fact that, well, let me back up for just a second. When you're transacting with a digital asset, you have to have a public and a private key, right, to initiate that transaction. The private key is a unique identifier that everyone has on their digital wallet. It could be on your phone. It could be on a cold storage wallet or whatever. That private key is effectively a piece of property, right? Because that's what controls the digital asset. Wyoming has enacted amazing protections, unlike any other state, around the protection of that private key and how you can control those digital assets. So getting back to my point, when you combine sort of the corporate innovations, the regulatory innovations, and then the property right protections, I mean, we see a lot of people that really want to take advantage of that. They understand that. They want to custody and hold their digital assets in Wyoming. They want to take full advantage of that. And it's driving a lot of business to Wyoming.
Business is not only business, but also people with estate planning purposes. You see more and more people that, again, hold a lot of their investment in digital assets. And they want to make sure, I want to come to Wyoming because you guys are going to understand how to protect this for me and for my children and grandchildren. And I want to make sure that my estate planning is done the right way. We have received a lot of inquiries from clients now, like, how do I do this now, right? And what is the next step for me? So it has opened a lot of doors for businesses as well as individuals.
Yeah.
Right?
Well, I think, Flavia, we'll maybe wrap up there. This is really hard for lawyers because we're just scratching the surface on these topics, and there's so much changing on a daily basis. But to really dive into this, would take a lot more time. So hopefully our listeners will reach out with questions or topics that they want to hear us, dive into, and maybe we can come back and really drill down on some of the topics that are of interest to folks.
Yeah, there's a lot that's going to happen in the next 180 days. We'll definitely keep an eye on it and make sure that we talk more about it and inform folks of how things are going.
Thanks for tuning in for another episode of the Hathaway Kunz podcast. Please join us again next time for more discussion. And in the meantime, if you have, or any of our listeners have questions or topics they want us to drill down on, please feel free to reach out anytime. Thanks.